When it comes to transaction categorization, Xero versus Billy is a question many businesses are grappling with. Both of these accounting tools offer decent features for categorizing transactions, but which one is truly the best? Let's dive in and see how they stack up against each other. First, let's talk about Xero. It's well known for its robust features, and transaction categorization is no exception. Xero allows you to easily categorize transactions by using its automatic bank feeds. You can assign categories to different transactions and reconcile them quickly. Xero does an excellent job of learning your preferences over time, automatically suggesting categories for future transactions based on past ones. However, this system can occasionally get it wrong, especially when dealing with slightly unusual transactions, requiring some manual adjustment. Next thing to consider is the user experience. Xero's interface is sleek, but it can feel a bit overwhelming at first, particularly when trying to categorize transactions in bulk. There's a lot going on, and sometimes the process of finding and correcting miscategorized transactions can be tedious. Additionally, while the learning curve isn't steep, it does take time to get fully accustomed to how everything works, including the transaction categorization features. Now, let's move on to Billy. Billy has a much more straightforward approach to categorizing transactions. When you link your bank accounts, Billy automatically fetches and categorizes your transactions in a very simple, clean way. You don't have to worry about configuring complicated settings, and you'll find that Billy does a decent job of auto-suggesting categories. However, it doesn't have the same level of machine learning sophistication that Xero has, which means it might require more manual input when it comes to categorizing unique or new types of transactions. The fourth thing worth mentioning is the ease of corrections. With Billy, it's easier to go back and edit any errors in categorization. It's a straightforward process that doesn't require as much digging through menus, making it more user-friendly for people who are not accounting experts. But while it's easy to correct, it can sometimes struggle with accuracy on the first pass, which means you'll have to keep an eye on things a bit more compared to Xero. When it comes to integration, Xero is certainly ahead of Billy. Xero supports a wide range of third-party integrations, which can help streamline the categorization process, especially if you have multiple systems in play. Billy, on the other hand, while offering a few integrations, doesn't quite match up in terms of the variety and depth Xero offers. If you rely heavily on integrations, Xero might be the better option for you. Now, let's talk about pricing. Xero's pricing can be on the higher end, especially if you need the full suite of features. While it offers great categorization tools, the cost can add up, particularly for smaller businesses. Billy, on the other hand, is more affordable, making it a more budget-friendly option for those who don't need the full range of advanced features that Xero provides. So, after trying both of these platforms myself, while they both do a solid job, there's one alternative that might be a better fit for your needs. If transaction categorization is a high priority for your business, and you want something that's both accurate and easy to use, I'd recommend taking a closer look at the software in the first link of the description. The tools mentioned today, Xero and Billy, are good, but after testing them extensively, I found that there's an alternative that offers better categorization without the complexity or high cost. If you want to give it a shot, check out the free trial through the link below and get access to the best exclusive benefits available only to our viewers. Don't miss out. This could save you both time and money.